This business has grown over the last 25 years. It now is a $70 billion company with $2.2 billion of fee-related earnings, just over $500 billion of fee-bearing capital, 2,400 investment people, and 240,000 operating employees that help us deliver returns to our investors. The tagline that we've always operated with is we run, we operate, we build, we buy the backbone of the global economy. Sometimes we build the businesses within our enterprise. On the other hand, sometimes we buy. The real value that gets created is to operate businesses well. And our DNA in the organization has been as an owner, operator, and a builder of these businesses. With our bottom-up intelligence that gives us knowledge that most organizations don't have. And our values, and many of you know this, but are to be very disciplined, to be entrepreneurial, but to be very collaborative across the organization. And our approach as owner-operators with a long-term view and a focus on operational excellence has allowed those things to succeed over the years. We have a growth model which should continue well into the future. And there are tremendous opportunities for us to expand the franchise, grow the moat, build other businesses, tack on things adjacent to our strategies. And we think we're really just getting started.
We have a business model that allows us to consistently deliver very attractive risk-adjusted returns for our LP partners. We have a leadership position in the most important and fastest growing sectors of the alternatives market. And we have a business model that allows us to access the largest pools of capital being allocated to alternatives and turn around and deploy that capital into the largest investment trends on a global basis. And because of that, we expect to double the size of our business in less than 5 years. Said another way, everything we've built in the last 25 years, we expect to build again in less than 5 years going forward. We have been saying for years that the biggest investment trends around the world are those of digitalization, decarbonization, and deglobalization. Put very simply, it is because the capital needs and growth opportunities in these trends are so significant that they outstrip what is available from both public markets and from governments, creating a large and attractive opportunity for private capital. And while that opportunity is available to some, where it is particularly attractive is for those that can operate at scale at the intersection of one or multiple of these themes. And that is exactly where we play. Our scale and flexibility of capital allows us to be the go-to investor or the partner of choice for leading corporates around the world. And lastly, our operating approach, our partnership approach, and the fact that we have multiple pools of capital that are all uniquely designed for different situations ensures that we can always provide a capital solution that meets our counterparty needs as well as delivers attractive returns for our LP partners. We have a business model that allows us to access the largest, fastest growing, and deepest pools of capital being allocated to alternatives, and then a leadership position in terms of investing into the fastest growing investment themes on a global basis.
The objective is over the next 5 years, we will reach $1.1 trillion in fee-bearing capital. And from a client perspective, we will get there by doing more with our existing partners, deepening those relationships with those partners, penetrating under-penetrated segments like insurance, the middle market, family offices, broadening our product offering to meet the needs of those investors, big and small, and continuing to grow in private wealth.
You've heard from Bruce, Connor, and David just now about how we're going to double our business. So I want to spend a little time talking about the details behind it. It's important to recognize that our earnings profile, it really benefits from stability, predictability, and strong growth. The nature of our capital is resoundingly based on permanency. 87% of our capital is classified as either long-term or permanent in nature. And what's interesting about that number is that 87% contributes 95% of our base management fees, hence the stability of our business. We have a bulletproof balance sheet in which strong liquidity is a top priority. We have about $1.9 billion of cash on hand, no debt, and the capacity to put in place over $5 billion of debt at high-grade ratings. We have broad-based growth backed by our flagship funds, our complementary strategies, and our credit business. We're in a great position to take advantage of our strong balance sheet, our leadership position, the growth that we see in all of our businesses, including renewables, infrastructure, and credit. And for that, we should earn above 15% attached to our fee-bearing capital, our fee-related earnings, and our distributable earnings, while returning most of that back to you. That's why we think the best is yet to come.
We'd like to thank everyone for their time and their interest and their support.